Plans for China's economy for 2021's second half are mapped out in a meeting of the Politburo of Communist Party of China's Central Committee on July the 30th. According to government data, China's GDP growth rate reached about 12.7% in the first half of the year, which leads the world in economic recovery. But the COVID-19 pandemic is still evolving, and the recent outbreak in Nanjing and other cities are a grim reminder that pandemic prevention has great challenges. So, how can the economic growth be balanced with public health measures, and what government's philosophy could be taken for sound economic work? Let's loop in our panelists from both China and the U.S. For the latest on the Chinese economy in Washington, D.C., Arthur Dong, professor at Georgetown University's McDonald School of Business in Hong Kong, Edward Xie, chairman and CEO of Gaofeng Advisory Company in Beijing, Xu Sitao, chief economist from Deloitte, China. Gentlemen, welcome to the program. There are a lot of numbers we should dive in, and also a lot of latest policy adjustments coming from the Chinese side regarding Chinese economy. But first of all, I would like to ask all of you about the impact of latest Delta variants on economies, both China and the U.S. Let me go with you, Mr. Xu, on China's.
Delta variant clearly is resulting more anxiety and jitters. But I think the broader direction remains unchanged. Global economy is recovering, and the vaccine rollout is proceeding. This is true for most economies. So our baseline scenario remains unchanged. The Chinese economy is likely to grow around 8 to 8.2%. That's our forecast.
So short-term impact, Mr. Xie?
I think in the short term, the overhang of the concern about the pandemic is not going away. Even in China, as you know, we have some outbreaks, but nonetheless, it's happening. And I think people are concerned it's not going away. It's creating more uncertainty, in my view, on the short-term economic outlook for many other countries.
Short-term, very important, of course. Professor Dong, what about the impact on the U.S. economy? Chinese and U.S. economy always very much interlinked.
Yes, thank you, Wei. It's always good to be with you. I would agree with Dr. Z as well as Mr. Xu in terms of the global impact of the COVID. With the globe in the United States is right now on the path to recovery. And so far as the effect on the United States, the first half GDP was close to 6%. But the big issue that's looming on the horizon is that there's a high degree of anxiety with regard to the return of COVID, as only 50% of the American population has been vaccinated. And so this is a cause for concerns, and even Goldman Sachs has restated its outlook for the second half of the United States in terms of GDP, because this is a looming risk on the horizon, because there may be shutdowns as a result of the growing spread of the Delta variant.
Having said that, though, Mr. Xu, over the weekend, the Central Politburo meeting on the latest Chinese economic policies very much attracting attention. How do you see the result of it?
I think the result of this meeting is the focus is to support growth. In fact, before this meeting, the reduction of reserve requirement rate a few weeks ago, I think already sending that message. The issue is not about this year. This year, because the base effect from last year was so strong. So this year, the growth number is going to be high, at least 8%. But going forward, I think policymakers are beginning to worry, not just about the headline growth, and also about inflation, high commodity price impact on manufacturing sector, so on and so forth.
1 trillion yuan, that's what you're referring to from the bank reserve ratio. That means 1 trillion yuan already into the market, and that's about 154 billion US dollars. But that is likely to be short term. Mr. Xie, what is your take about that?
Yeah, I think the signals that they're sending out is that they're looking for more high quality and inclusive growth. That means they're looking at not only in the short term, but also a longer term growth of the Chinese nation, and the implication for various sectors and various segments in the society. Yeah.
But what about the question about the Chinese firms listing overseas that created such a stir among international investors, and of course about the Chinese education tech firms?
Yeah, I think this has been exacerbated by the recent event with Didi, who went IPO in New York. At the same time, I think the Chinese regulators are now at least saying that they have not fully complied with the national data security scrutiny. And so I think this is a big issue that both the Chinese regulators as well as the New York Stock Exchange are now trying to deal with. But there's no framework on how to deal with that yet. So right now, I believe this is the key reason why this short-term measure has been announced. Over time, I'm sure things will get sorted out. But in the meantime, data security, cyber security, all these things are critical. It's not only in a way, right, Chinese companies going to the US, but also I think many US companies operating in China are actually going to be facing with the same issue.
Professor Dong.
Yes. Yes, Wei. With regard to what was just spoken by Edward, yes, I do believe moving forward that President Biden has directed the Securities and Exchange Commission here in the United States to impose further scrutiny as well as impose conditions on Chinese companies that are considering a listing in the United States. And those conditions are going to tighten up or impose stricter regulations with regard to, a Chinese company seeking to have a listing in the United States. And so this is one of many sort of challenges, I think, that are going to be faced by Chinese companies as they consider listing and accessing the capital markets in the United States. Now, with regard to the comments about the Chinese educational firms and the private firms, many of which are publicly listed, that certainly has sent a warning shot, throughout the entire Chinese economy, and as well as, looking at those stocks that certainly, have seen a considerable amount of value loss. And I think a lot of it has to do with perhaps trying to find a way to depressurize or take some of the stress out of the average middle-class family's life in China as they spend an inordinate amount of their salaries and savings on private tutoring for their children. And if they spend on that, that means they can't spend on the economy.
Professor Dong, we see a mixture of comments coming from, for example, analysts in the United States. Some have been suggesting exactly what you just said, that it's supposed to take the pressure off from the Chinese middle class. There are also comments about whether that's going to impact on investors' confidence in China. So how do you see this mixture of comments coming from your side of the world?
Well, certainly here in the United States, investors who have invested in those companies, both on the institutional and individual side, they've suffered some losses, as a result of the downdraft in the value of those stocks. And so in order to calm the nerves of investors here in the United States, more clarity has to come forward from policy officials in China. And we saw that most recently a few days ago when the economic ministers reached out and the securities ministers reached out and informed a group of highly informed Wall Street professionals and leaders of Wall Street banks that China was going to take measured steps with regard, and they should have continued confidence in the investment in Chinese
what you're
companies.
referring to is the head of the Securities and Regulatory Commission, the deputy head of that specific organization reaching out to investors. And Mr. Xu, if you look at this statement coming out of the weekend Central Politburo on economic policy in China, there are several sentences describing the sustainability, consistency, and stability of the policies. Now, given what we just earlier discussed, how do you see, China's attitude toward the policy adjustments? It's unique type of governance style, which is more government policy driven, and also its takeaways from some of the latest rounds of market and private firm investor interactions. Mr. Xu, sorry for my loaded question, but I thought I need to put in more information into this question.
Sure. I think this sentence is related to the very first question you have raised about economic outlook against the backdrop of Delta variant, against the backdrop of high commodity prices, against the backdrop of high valuation of asset prices, not just in China, globally.
Yeah.
So from policy makers' perspective, they would like to maintain continuity of the policy. In practice, that means no hasty withdrawal of liquidity and accommodative policies which were implemented during in past 2 years. In other words, both central bank and the Ministry of Finance are going to take a very gradual approach in phasing out all these accommodative policies the next 6 months or even longer. Again, on continuity, referring to your earlier discussion with the other two gentlemen, I suspect what policymakers were trying to convey is improving communication with the market.
We do see also in the Central Politburo meeting readout, there's likely to be more encouragement to make sure there's going to be reliable supply chain and industrial chains, and there's going to be encouragement for the coming of small and medium-sized companies that are going to fill in the vacuum of those chains. How do you see that, especially when you have geopolitics and the global supply chains being disrupted both by that and the pandemic?
We all know Chinese economy has been recovering strongly. We also know the focus has been resumption of business since early 2020. However, we also know high commodity prices are hurting manufacturing industries, and particularly small and medium-sized ones.
Right.
So I foresee tax cut and relief, and really aimed at alleviating some of the difficulties subject to SMEs.
I see. Professor Dong, I want to go to you about that. We see the U.S. GDP number dropping compared to expectations, 6.5%. That's 2 points lower than the earlier expectations. A lot of people say this has a lot to do with the slow recovery, but you also see the inflation number going up. At least the CPI is about 5.4% increase in June compared to May. So what does that say also about the U.S. in terms of disrupted global supply chains?
Yes, with regard to the global supply chain question, that's one of the battlefronts that's being waged now between the United States and China. President Biden initiated upon his entry into office the 100-day review of the American supply chain. And that review was completed not too long ago, and now they're going to shift into the second phase, whereby they will identify those sectors and those industries whereby those companies will be required to return a good deal of that supply chain to the United States. So we're still in the very early stages, but the areas such as semiconductors, pharmaceuticals, protective equipment, and things related to the health and safety of the American population, they're going to take a very hard look at that. And I would not be surprised at all if a portion of that supply chain is forcefully removed from China and returned to the United States. And so that's one aspect of this ongoing battlefront between the United States and China.
How much would that mean in terms of the shift of investment and also profits of companies? Is there a number that the U.S. has come up with, and what would that number mean for the U.S. consumers? I think that is one of the key questions, because policymakers could say so, but realities could actually weigh the other way.
Certainly, there will be a secondary and tertiary impact. Oftentimes when you initiate a policy, there are sometimes unexpected consequences, and indeed there may be some price inflation with regard to certain consumer goods if those consumer goods are now resourced or brought back to the United States.
We already saw 5.4% CPI from June to
the
May.
United States is facing a significant amount of consumer inflation, particularly across many primary commodities such as building materials, as well as the price of food. So agricultural commodities, proteins, meats, things like that have gone up beyond the rate of inflation.
Yeah.
And we haven't seen these kind of numbers, certainly since 2008. And so this is another worrying factor amongst economists here in the United States as to whether or not we are entering a new normal. Another indicator is also wage price inflation. We're seeing across the board labor shortages in the United States for certain types of jobs, particularly in the blue collar sector. And so we're experiencing that, and there are many companies that are indicating that they have to raise their wages in order to attract employees.
I see. Having said that, though, let's come back to the Chinese situation. Mr. Xie, one of the things being mentioned at that meeting over the weekend is about the highest level of local officials will be responsible for what they call the fiscal and financial resilience management mechanism. Of course, this has a lot to do with China's governance style. Very much policies are government-driven, and local government plays a big role in that. There's also concern about the local government debt. There's concern about private sector debt. And how do you add all of these up and see where the country actually is going in terms of handling all these unpredictabilities?
Yeah, it's pretty complicated to manage a large country like China. So from Beijing's standpoint, it's critical that the local officials in every localities will have to sort of work in a certain way so that it can enhance what you describe as the economic resilience of the country. Mm-hmm. So what does it really mean? It means that the local government officials should not be just looking for one-time big achievement, one-time big deal like I created a sharp increase in GDP this year, and then I go away. That's not for the long-term sustainable and resilient growth of China. Mm. So every local government official is now charged with looking at this issue, number one, on a holistic basis, not on just one or two priorities. Second is that they have to look at it at least in the medium, if not the longer term. Number three is, as we said already, there are certain boundaries that are red lines from the standpoint of the Chinese government, including things like data security, like the private education, that kind of stuff. That's also an important input into resilience across the whole country.
Before we go, I do want to ask every one of you one final question regarding China's governance style in terms of economic policies. Everybody understands that this is a more government policy-driven economy right now, particularly. And we do see other countries also becoming more federal government policy driven, but not as much as China, one could argue. So what would that mean for investors overseas, for Chinese business owners, and for predicting the policies of China's economic growth? What would that mean? Professor Dong.
Well, in the United States, we have a system of economic policy that is also, to an extent, driven by the federal government, but a much less extent than China. One thing that China can do and do better than the United States is manage in an efficient manner. And so when you have a single party system, they can make decisions, and those decisions get pushed into the provinces very quickly. Whereas in the United States, the sort of, the difference between policy and action doesn't happen so swiftly. So much to, China's benefit, the system is far more efficient when it comes to the implementation of policy. And so I think from that point of view, maybe other nations around the world are perhaps starting to look at some aspects of the Chinese model and say the coordination benefits that China can impose perhaps could be useful in in Western economy and Western settings as well.
Interesting. Mr. Xie.
Yeah, I think from an investor standpoint, it's critical that they really have a good read on the directions of the government policies, in particular for those who are investing in Chinese companies. And I think this, this Central Bureau meeting information document actually gives out a lot of good information about the direction of the country. Mm-hmm. And so if from an investor standpoint, if you read carefully about the direction that the country is going, you can actually pick a lot of areas to invest, and most likely you're going to get pretty good results as well.
Mr. Xu, final words.
Sure. I think from investors' perspective, they need to look at a trade-off between efficiency and fairness. Clearly, going forward, there will be more emphasis on equity and fairness.
Mm. Very interesting points, and certainly the important points that all of you raised through our conversation. Thank you so much, every one of you, for your contribution. Arthur Dong, Edward Xie, Xu Sitao, really appreciate it. Thank you. And you're watching World Insight with me, Tian Wei. Coming up, strong sustainable economic growth coupled with ambitious carbon targets. How can China do it all? Advice from a world-renowned Chinese economist. Next. Welcome back. This is World Insight. I'm Tian Wei. As many countries reel from COVID-ravaged economy, some has shown strong resilience and robust economic growth, as we have discussed in the first part of our program today. With the ever more complex geopolitical landscape, will the world economy be able to keep the momentum of economic growth? And with the debut of its carbon trading market, how can China pick it up to high-quality growth and meet its 2060 carbon neutrality goal? I pose these questions to Justin Yifu Lin, Dean of the Institute of New Structural Economics at Peking University. Let's hear his wisdom. Professor Lin, the most important topic, of course, is the state of the Chinese economy.
Right.
How sustainable do you see the growth could be?
I think the growth in China is on the process of recovery from the hit of COVID-19. And I think that recovery is steady, on the right path, and relatively speaking, China is doing well.
What do you mean by doing well?
You can compare to other countries. They are still under the hit of the crisis. They have not fully recovered from COVID-19's impacts. And China was hit the first, but China implemented very effective containment measures. And so the production, the life are returning to normal almost. And so it demonstrates from the growth rate compared to last year. And as you know, the Chinese government just released the new statistics, and you can see it's steady, it's recovery.
What are the priorities, do you think?
Certainly, we need to maintain the stability of the economy, and certainly, if you do not have growth, you cannot maintain the stability.
Structural reforms, Professor Lin, that means the growth rate will be down, and China going to accept that. But well, now things are different.
Well, we have been carrying out structural reforms since 1978, but we maintain very high growth. And in the coming years, certainly we will have to carry out further structural reform. And I'm sure we will be able to maintain reasonably high growth rate.
To you, what is
compared
it?
to other countries.
What does that mean, reasonably high growth rate?
China has the growth potential of around 8%, and it should be possible for China to grow at around 6%. And to understand the growth potential is very important. Just like if you buy a new car, you like to see what is the speed limit for the car. That is the potential speed that you can reach. But in reality, how fast you're going to drive the car depends on many things: weather condition, your traffic condition, your physical conditions. And from what I see, China is still on a stage with a very high growth potential. But whether we want to have such high growth rate very much depends on domestic, international situation, and other needs of the economy. We need to take care of the situation of the carbon emission. We want to reduce the carbon emission. We want to have green growth. We also want to reduce the gap between urban areas and rural areas. We want to provide the equalization of public service to the urban area and to rural areas. All those require resources. And you put those resources in those areas, you improve the quality of growth and harmony of the society. But certainly, it will crowd out the resources you can use to speed up your growth.
China has been, Professor Lin, as you just mentioned, committed to 30-60 agenda on carbon peak, carbon neutrality. Now, the amount that we're talking about today, only 50% can be done with the current technology and innovation, with the current energy efficiency and use of renewable energy, and also with the current governance and operational styles. There are other 50% in this overall goal that cannot be achieved unless we have real innovation in the future. So Professor Lin, this is a huge transformation that we're talking about when it comes to China's economy, to 30 and 60 agenda. So how much would that have an impact on growth rate, employment? What does that mean for key sectors of the economy, while the geopolitics is also going to directions that we cannot predict?
I think we have a saying, there's a will, there's a way. As you mentioned, based on current technology, we can only achieve half of the targets, but we committed to meet the targets. Right. So that means we will spend more resources to innovate new technology, new ways of use of the existing technologies, and to reduce the carbon emission. And those kind of investment in technology itself is a driver of growth. And once you have a new technology, you need to have the policy framework to encourage people to adopt the new technology. And certainly there's some cost for that. And so that's the reason why if we do not care about this goal, we should be able to grow it to 8%. But since we want to have not only growth, we also want to have high quality growth, and we want to meet our commitment to the global communities. And under the kind of scenarios, certainly the growth may be, moderate somewhat compared to the growth potential. But if we can do that, I think China will have a much better quality of life. And China can contribute to the global effort of the climate change. And so, certainly it's an act of balance. And I think, even we consider those act of balance, the potential is still there.
The first Chinese carbon market just began operation last week. Per ton of carbon, it's 52 yuan. If we compare that to what is going on in Europe, for example, in one small country such as Switzerland, 1 ton will be more than 120 euro. So that's a huge difference. And you think about trade, which is only one aspect of it when it comes to tax, there's going to be tremendous pressure on China to do business with the rest of the world from now on. So, Professor, even if we take the first step, it is a long march and probably painstaking long march.
I agree, but we have a saying that no pain, no gain.
True.
You suffer from the pain, but once you reach the goal, you have a lot of satisfaction in mind and that's happiness. So that's only pain, right? And certainly the stage of development in China is different from the stage of development in Europe. And we know for the advanced country, they need to do more because fundamentally the causes of the carbon in the atmosphere was mostly contributed by the industrialized advanced country. And for the climate change, as you know, the principle is common and differentiated responsibility. We commit to that and we take the responsibility. Certainly compared to the advanced country, the carbon prices in China is lower. But compared to other developing countries, it's quite high.
Right.
Yeah. And so if we do our due share, we took our responsibility and we honor our commitment. And I think that with this kind of carbon trading, carbon market, I'm sure it will contribute to the effort for reducing carbon emission and to peak the carbon emission by the time of 2030, and also to reach carbon neutrality by 2060.
If you think about China's reform and opening up, at the very beginning, of course, it was a very challenging period of time, but that was also a time when China began to be embraced by the rest of the world. Now, one could argue circumstances have changed somewhat in terms of the immediate reality of geopolitics. So, Professor Lin, as an economist, how do you see the changes that are taking place in other fields, different from the economy, but having a tremendous impact, certainly, on China's international environment, and also on China's ability to innovate and also to progress, Professor?
Well, certainly, if you want to, design your policy, you need to know external environment. But when we try to understand the external environment, we also need to separate some policymakers and the majority of the population. We also need to separate, one or two countries with the rest of the country. Certainly, there are some countries like the U.S. has the intention to contain China's development because they see the rise of China will overshadow them. And, as I mentioned, measured by the purchasing popularity, the economic size in China is already larger than the U.S. And measured by market exchange rate, most likely by the time of 2030, China will be larger than the U.S. And economy is the foundation of influence. So that means the influence of China in the world will rise and someday will overtake the U.S. U.S. is unhappy about that. But other countries, they never had the ambition to be the largest country in the world, right? And so who cares? The U.S. to be the largest economy or China to be the largest economy? I think the majority of people is indifference to them. And what matters to them is that the growth of China will provide opportunity for them or not. And as we see, China growth carry out in a peaceful way. China engage with other country by the economic relation, by the trade relations. And in fact, the growth of China not only benefit China, but also benefit the majority of the people in the world.
The other thing is about China's own vitality in terms of economy. Recently, we have seen, of course, this is more a governance issue. Current Chinese government has been taking measures toward some high-tech companies and also about Chinese companies listing overseas. Now, of course, those are just one slice of the national economy, but many suggest what would that mean for China's innovation? What would that mean for Chinese companies going global? Professor Lin, as an economist, how do you see all of these issues?
We need to support innovation, and that's for sure. And we also know if innovation to be successful and become a monopoly, then we need to regulate the monopoly. So I think recently the Chinese government took some measures to reduce or to contain the monopoly, and that will be beneficial to innovation because monopoly will suppress innovation. And overall, I think the policy is taken by the Chinese government. That policy also implemented by the government in the advanced countries, including the US and in European countries. So I think the Chinese government do what the Chinese government need to do to maintain the competition and to encourage innovation.
I remember years ago, it was you who have been advocate about South-South cooperation and also bringing developing and emerging economies together to be able to figure out some kinds of models that could be adjusted in different situations so countries can learn from one another. Professor Lin, at this stage, do you think there are much more results?
I think that to learn from other people's experiences is very important. But the experiences actually also reflect the context. Certainly in the past, we learned the theory, we learned the experiences from the advanced country. And we try to adapt those kind of theory or adapt those kind of experiences in the developing world. I think the intention certainly was respectable. But if you see the result in general are not satisfactory.
What do you mean?
And because the theory and experiences, they always have some preconditions. They are embedded in their social, political, economic environment. And those kind of conditions are different in the developing world. If all the conditions are the same as the high-income country, advanced country, then you are advanced country, right? And the things conditions are different. And so what works or what will not work will not be the same. And the developing country, in general, their conditions are more similar. And so the successful experiences in the developing country will be more relevant for other developing countries. And so that's the reason why we need to learn both the success and the values in the developing country in order to enhance our understanding how to improve our performance in our country.
Professor Li, on the other hand, how much is China providing reference to the others, particularly in the developing and emerging world?
So you need to understand the underlying reason for the success of China's experiences.
What is it?
For example, Chinese experience always say you need to find in the truth from the facts.
Seek truth from facts,
right?
as they say.
And the facts are different from different countries. But try to seek in the truth from the facts. Those kind of basic principles should be general to every country. And secondly, you need to be pragmatic. We know one day we want to be an advanced country. But today we are a developing country. We should understand under the current situation what we can have and what we can own, what we can do. And that kind of pragmatic way should be also applicable to every country. In an advanced country, they own what they can have, they do what are suitable for them, so they are finding truth from the facts, they are pragmatic, based on their condition. But if you try to do like the advanced country, if you like to own what the advanced country can own, then it's unrealistic. And so those kind of basic principles should be applicable. And I think every people have the drive to improve. And so once you give them that opportunity, they will work hard. But if you will not give them that opportunity, certainly they will not work hard because they can improve by their effort. And certainly if I work a lot, I cannot be improved, and then I will not have the incentive to work hard, right? So I don't think that to work very hard is unique in China. If we give the opportunity and to see the result of their hard working, then they will work hard.